Welcome to CRUX Investor. We're going to be speaking with Jervois Mining and M2 Cobalt about their proposed merger. In a minute, we'll be speaking with Bryce Crocker, the CEO of Jervois, and get his take on things. But first of all, let's start with Simon Clark, the CEO of M2 Cobalt. Good morning, Simon. How are you?
I'm great, thanks, Matthew.
We spoke back at the end of November, I believe, and a lot has happened since then.
Yeah, that's an understatement for sure. It's been a busy time.
Right. Okay. And obviously the recent merger. In fact, when that doesn't close till when? Sort of.
It should close early to mid-May, potentially a little bit before. It all depends on the regulators and getting circulars together and exchange approval. But it's all pretty straightforward stuff. So we already have overwhelming support from our shareholder base, which is great.
Fantastic. And obviously, when we talked, you were talking about some of the targets for this year being around the obviously the drilling program and sort of understanding what had happened there. You were looking to raise capital and get into a sort of PEA sort of situation for the sort of end of next year. I guess the capital raising component has been solved by this merger.
Correct. I met Bryce about a year ago, actually, and we were talking, as Bryce will tell you, their vision for what they're trying to build is actually, it's wider than ours, but has a lot of similar elements. If you remember, we were really focused on discovering major deposits and the potential for large-scale production. So, I met Bryce about a year ago, actually, in Cape Town at Indaba, and, Bryce talked about their plans for a platform that would be multi-jurisdictional, looking to build a big player in the battery metal space with a lot of focus on cobalt. So obviously there was a lot of overlap in what we were looking at doing, and we talked more and more. Bryce's team came into country, met our team, and there's a really great fit because the technical expertise that Jervois brings on the development and the production side is first rate. It's, we think outstanding, and we're a little bit biased, but we think we have an excellent technical team on the exploration side. So there's a really good fit for what we're looking to do. And when we started talking in earnest with Bryce, it didn't make any sense to go out and look to raise more capital. It made more sense to put the two companies together. This underpins our exploration program going forward. Jervois has a strong balance sheet, both in terms of cash and liquid assets. And that's been really important for us because it's allowed us to really plan a bigger initial drill program and expand the work that we've done to date. So we're really excited about it.
That's great. I mean, the thing that strikes me initially is obviously that Jervois come with big company experience. There's some pretty big names in there individually, and obviously the companies that they've worked for. You guys are, junior explorers at this point, albeit in, as I think you've referred to before, an elephant hunting country. How do you envisage the relationship working? Do you feel initially you're going to be? I mean, you're the guys with the exploration experience. Are you going to be left alone to get on with it, or is it a bit more collaborative than that?
Well, my view is it's more collaborative than that. And again, I'll let Bryce obviously give you his views, but I think, yes, we're a junior, but I think it's very unusual for a junior to have the depth of team and presence that we have in Uganda. I think before I mentioned we're first movers in Uganda. My colleague, Dr. Hinton's been there for 13 years. And she's built a really good presence, a really good network. We have a team of 30 people there. So for a junior to have that depth in the area of expertise, we think is pretty unique. And, we combine it with a management team that very much exploration focused, but has had a number of successes in a number of projects around the world.
Mm.
And so I think there's a very good overlap. Clearly, as you point out, the big company expertise and the depth of knowledge on the Jervois side definitely takes this up several notches from where we are. But I think, when you're looking at products like cobalt, I think you have to be able to provide a solution that, you can go from the exploration side, development, production, and a lot of Bryce's expertise as well as is in the whole trading side beyond that. So I think it offers a very unique package going forward, and that's really what got me very excited.
Right, and what's your view as to what it means for shareholders in terms of where do they gain? When will they see some sort of uptick here? Because obviously the market was difficult last year.
Yeah, no, for sure the market was difficult. I think getting bigger and stronger and deeper makes a lot of sense in the market at this time. As I said earlier on, the pretty much unanimous approval from our major shareholders, and certainly a lot of the earlier shareholders to the deal. You have the odd person who's very much in there for the exploration side of it. I think the fact that the exploration side is now going to continue and actually gain momentum is important for some. But I also think that, when you look at the cobalt space, there's a lot of juniors that have talked about bringing on production, and there's been very little success so far. And again, I think there's a real opportunity for this platform. And again, that's what got me excited. So from our shareholders, as I say, we've got pretty much overwhelming support from those that we've spoken to, and obviously everyone's seen the deal terms that have gone out. But there's no doubt that the multi-jurisdictional side that Jervois brings and this broader technical team, I think from a risk perspective from our shareholders, it's not lost on them. So yes, there are some people in there who are typically in there for the whole exploration side and the big risk, big return. But in general, I think they still see the huge potential here. That this, I think, increases our chances of success.
Yeah, for sure. I think in the longer term, I think it will, especially if Jervois are able to access capital. It solves one of your major problems for last year, I think, as a junior. I got to ask, it's going to be listed on the ASX. You're thinking of co-listing on the TSX. Is that a function of the fact that you guys are in Vancouver, or because if you think of African stories, typically they get a much better reception on AIM? So what was they thinking there?
You point out London is obviously a big place for African stories. I think when you look at battery metals, though, there's a lot of understanding starting to come into the North American marketplace. And I think being based here and having a listing in Toronto as well as Australia gives us good coverage. When we've done a lot of our marketing on the M2 side, it's been Asia focused and European focused. But there's more and more of a growing appetite in North America, and Toronto is certainly a very deep index in terms of mining stories. So, from my perspective, I think it's key for our shareholders and us that we continue to see the TSX listing. And again, Bryce will talk more from his side, but I think from their side, they also wanted to move beyond the ASX, have a North American presence. And certainly the funds in London and Africa and Europe seem to be very happy with the TSX listing. That's never been a problem for us in any of our marketing. So I think the dual listing makes a lot of sense. I think it'll allow us to cover the globe in terms of potential investors, which will be great as the story evolves.
And you're, as an ex-securities lawyer, that's you, not me, what do you think you will be doing in terms of using both markets to almost sort of play off each other in terms of driving liquidity, a bit more volume? Otherwise, you're sitting on sort of static stock, which again, I think people suffered from last year. How do you get retail excited and into this?
Well, obviously as a Vancouver company and a junior miner in Canada, we do have a large retail element, and I think we'll continue to see that. Obviously, the ASX has a large retail element as well. But I actually think it's less about which market in a way, and more about what we do as a company. And we will have drills turning in Uganda again in about a month's time. We're looking at and as Bryce will touch, we're looking at a number of major projects around the world. And we also have through Jervois, a very large project coming on, at the PFS phase in Australia. So I think, I think the liquidity side of it, if we can actually focus on the business, deliver results, I think a lot of that will take care of itself.
So I think that may well be true, but if we look at a lot of companies, again, last year, maybe a factor of the market, maybe the factor of people just distracted with other brighter and shinier objects like cannabis and blockchain, etc. We saw a lot of companies making announcements, these large catalyst moments they believed, and no one cared. Nothing happened.
Yeah, I mean, I think that was a big factor of the market last year. Canada, obviously cannabis, took a lot of the risk capital out of the traditional mining space. From what I've seen, I think that's shifting back to more of a normal playing field. I mean, the cannabis is here to stay, and there's still a lot of deals being done. But I think we'll see a more normal market. And I do believe that you're going to see, like, it's interesting seeing both nickel and copper starting to do pretty well over the last couple of months, which obviously are important metals for us as well, and a big part of the battery metals thesis. And I do think you'll also see on the cobalt side the relative glut of supply that did come on in the short term. I think that'll be moved through, and we'll start to see the medium to longer term, a lot of the issues around demand and supply that have been well written about and are out there, but have perhaps not yet, been fully digested by the market. So yeah, I mean, last year was highly frustrating. News was typically an opportunity for volume and people to sell, and that's been the focus. But I do think as we move through this year and as we hit more and more milestones, especially as part of a bigger group, I think we'll start to see more and more momentum there.
Okay, and obviously I think you've got a 3 million bridge until the deal closes from Jervois. Quite handy.
Very, very handy. We've got a 6-month program mapped out now, which will commence in April with some more drilling, expanding our initial drill program. Again, these are large targets, so we're looking at adding some significant more meters in terms of the amount we can drill, and doing additional geophysics and geochemical work. So yes, for us it's great. It really keeps the momentum in Uganda. It keeps the team fully moving forward, and as I say, we'll be back drilling in the April time frame.
I think there's an expectation from you that Jervois will solve your financial or funding issues in terms of that will be their focus. What's their expectation of you? What have you agreed that you are going to deliver for them as part of this merger?
Yeah, so I mean, yes, I mean, they bring a bigger balance sheet, and they're going to help us on the momentum side, but they do, as I mentioned, they bring diversity. They bring an exceptionally strong team that I think can really help with what we're doing, not only on the exploration phase, but we did talk before about the historic Kalembe mine in Uganda. There's opportunities relating to that mine in terms of a potential restart, and with the technical expertise and the background of a lot of the Jervois team, it really gives us greater credibility as we move forward there. I mean, a big phase of that is exploration. So again, I think that's why it's a really good fit. But then beyond that, there's other East African opportunities that we're looking at as a combined group, which I think are really interesting. And then obviously, Bryce will touch more on the Australian assets, but beyond that, in North America, there's some potential opportunities as well. So I think, for me, if it wasn't just about the capital, I mean, we are junior miners, so we're used to the cycles. And yes, it wouldn't have been great if we'd had to have a slower period before the market's return, but we certainly believe fully in our assets and what we're doing in Uganda, and we would have continued to support that. This just allows us to accelerate. It allows us to bring in a team, but again, critically, it allows us to look at a bunch of other opportunities, which excites me and excites my colleagues.
Great. Thank you, Simon. That is a wonderful update. I'm very glad that you're in this position, and I look forward to hearing a bit more from you quite soon.
Thank you very much.
And now we're going to speak with Bryce. Good morning, Bryce. How are you?
Matthew, good evening from this side, but good morning across in North America.
Absolutely. So you're in Melbourne at the moment, are you?
Currently, yes.
Is that where you're based from, or where do you spend most of your time?
I spend most of my time on an aircraft, it seems, but currently Jervois has an office here in Melbourne.
Right.
The bulk of the team is based in Perth, and our operational project in Australia is New South Wales.
Well, look, obviously you're new to our viewers, so it'd be great if we can have sort of a run through of what Jervois is, and perhaps how you kind of came about this merger with M2.
Sure. I guess for context, Jervois was created when I was asked to take a look at a project called Nico Young in New South Wales on behalf of some shareholders who'd taken control, I guess, of Jervois. Mm-hmm. It's been on the ASX for 50 years. It's had a project called Nico Young for 20 of those years, I guess. It's a laterite deposit in New South Wales. The Sunrise deposit, Blackbird deposit, which is controlled by currently Cleantech, which is a vehicle sponsored by Robert Friedland. I was aware of Nico Young through my background, which I can touch on, but it's similar to the Cleantech deposit. And at the time, I'd become aware, obviously, that Robert Friedland had managed to increase Cleantech's market value to $500 million. Jervois was languishing. I gave the technical data to a couple of my individuals whom I was working with private equity, and we determined we could use a lower risk flow sheet than what had previously been considered heap leaching. So we decided that it was worth a crack, and that's where I came on as CEO. A couple of other executives, Brian Kennedy and Michael Rodriguez, came on as directors, and since then we've been building out the team. In terms of our respective backgrounds, I was part of the founding management team at Xstrata when we IPO'd in London in 2001. Private equity, Brian Kennedy is an operational project executive, very experienced. He built the Kibali mine in the DRC as project director. He's run Mount Keith, ran Kambalda, ran the Kalgoorlie nickel smelter. He ran Murrin. He ran WMC's fertiliser business. He's also spent time at Goro and a lot of time in the DRC. Very experienced operational executive. He's also founded a couple of companies which he's IPO'd and then gone on to sell in trade sales. I've worked with Brian for a long time. He and I initially worked together when Xstrata bid for WMC Hostile in 2004. He was part of the insider team, if you like, of executives who he used, just given the hostile nature of the bid. Michael Rodriguez was operations director at Murrin for a decade, and in our view, one of the most experienced nickel cobalt hydrometallurgists in the world. The relevance of that was at Murrin, it's a Glencore operation.
Yeah.
High pressure acid leach. It also ran a heap leach for an extended period of time. Really the only commercial nickel cobalt heap leach of substance that's been operated. That was a technical success, commercial success, ran for 3-4 years. And Michael was at the forefront of that as operations director, overseeing the whole site, the construction and the operation of the heap leach. So he's really the brains behind nickel heap leaching, but together with another individual who's running the metallurgy for the pre-feasibility study, David Reddit. David Reddit was vice president of projects at Manara. Our group manager of geology, David Selfie, was held the same role at Glencore, Manara. The chair who came on, Peter Johnson, Peter ran Glencore's global nickel assets, sat on Glencore's executive committee for many years. He was also CEO of Manara. And I guess I won't run through the full team, but obviously there's a heavy weighting of Glencore executives, half a dozen or more behind the scenes. And what we're looking to create in Jervois is a mid-cap battery raw material player supplying raw materials for lithium-ion cathodes. Someone is going to fill the space if you look forward 3 to 5 years, given the dynamics for electric vehicles and personal electronic devices, but particularly EVs, obviously. And we're looking for Jervois to fill that role. Most junior mining companies lack technical depth to either raise capital, construct mines, commission mines, operate mines, and what we're building is essentially an operating company.
A longer term horizon than most juniors who perhaps are looking towards the next fund.
Yeah, I mean, we're looking at this quite. When I approached Peter Johnson, he mentioned, you do realise you're 1/100th of the market capitalisation of another ASX company that's approached me for a similar type role.
Yeah.
Our pitch is that's the upside. I mean, that's typically you don't get a group of executives coming in at this end of the market. Management matters. I mean, our backgrounds, Peter's still associated with a private equity firm. I work with private equity. Your readers would understand that the quality of assets does matter in this business, but also the people running and stewarding those assets can make a big difference in terms of whether investors ultimately realise success or end in failure. So we're a group of individuals who've obviously worked together for a very, very long time. I mentioned Brian Kennedy and I from 2004. I drew him in to work on Kabanga when I was sitting on the shareholders, Xstrata's representative or director on that project. Peter Johnson and I both sat as directors on the Nickel Institute, the global leadership body for the directing regulatory affairs and for the industry. So we all know each other. We've all worked well together, executing, constructing projects, operations for a long time. And we're excited about what we can create in the battery raw materials space, because we do see it as unique. In terms of the commodity dynamics are unique. And we think that there's an opportunity to create something that is international, that does have a balanced portfolio of both producing assets and exploration upside, and that has some scale and liquidity. So for institutional investors that want to write a material check into the battery raw materials space, there's no leading obvious candidate for their investment. And so what we're looking to create is a vehicle that provides that. And obviously that involves elevating our market capitalisation to a level which attracts institutional investment. So it's hundreds of millions, if not more. Not forgetting the fact that at this point in our evolution, the retail shareholder base is very important in providing liquidity and support.
Yeah, and so just on that, what do you envisage that kind of profile looking like to the split between institutional, which are typically longer term holds, understanding that they do need the ability to be able to trade in and out, at times. The liquidity driven by retail, family office, high net worth, Aussie retail quite active in mining last year, were they? Because obviously the market was.
Yeah, I think. Our shareholder base has a high portion of retail.
Right.
It's somewhat of a new market to me. I mean, obviously, my background's at Xstrata, so heavily institutionalised. But I think that it's over time. I see most of our capital being sourced from institutional sources, but there's an opportunity for retail to tag along on a story, which is quite exciting and unique in the space, I think.
Yeah, so how are you managing that in terms of, I know your understanding is around institutional, and the experience of the board is pretty much up there with institutional fundraising. So juniors need to create liquidity. They need to create interest all the time, to get people in, to drive the share price up. Because we've got a couple of investments where the companies are very tightly held, and therefore not much trading. It's difficult to move the share price. So for people thinking of coming in to the new merged entity, why should they do that? What are you going to do to kind of help them?
I think it all comes down to execution of plans. I mean, it becomes a self-fulfilling circle. We're quite different to a lot of junior mining companies. Mm-hmm. When I meet with ministers in Africa or presidents, you won't see me taking a photo to shaking hands and putting out a press release. We're non-promotional. I mean, we don't put out press releases that are meaningless. When we have something to say that's important and relevant to an investment decision, then clearly we'll update the market. but we're purposely not promotional, and we're differentiating ourselves on that basis, and also differentiating ourselves in terms of what we commit to, what we promise to, and what we deliver. I think that whilst we have an active investor relations focus, I'm also a big believer that news flow, ultimately, if we deliver, that creates the liquidity events, that creates the interest. I'm not in a business, I don't believe in kind of creating news flow out of immaterial events. My job as CEO is to assemble a team that creates substantial news flow, whether it's through the drill bit, whether it's through project delivery, whether it's through acquisitions, whether it's through commercial initiatives such as offtake. That's how you create the investor interest. That's how you create the liquidity. And that's really what we're focused on. If you create something that's credible and people clearly understand that we are going to succeed in what we're setting out to do, then I think that people will come on. But again, I just think that for what we're looking to do in the industry and the type of processes that we're involved in, the discussions we're having with governments, our access to capital is quite different to most of the junior sector. And I think that ultimately the constraints that we face will be resolved over time as we deliver.
Okay, so how would you summarize your story to the market then?
If we can create a multi-asset, multi-jurisdictional cobalt investment that has genuine assets that are attractive, and so we're looking to build operations. So obviously, we didn't assemble the board we do to be a $50 million market cap company for any significant period of time. I've got guys that want to build mines that are hundreds of millions of dollars, and I've got guys that want to operate mines that are also significant operations.
How did you meet the M2 Cobalt guys, and what is your expectation of this merger on their part? I guess you've been very clear about what your role is. What's your expectation of their management team?
Sure. I mean, I first met Simon and his team at Indaba probably a year ago. We started seriously talking to the government and assessing the Kalembe restart opportunity around July or August 2018. Started spending more time in Uganda. As part of that, obviously, just given there's not a lot of exploration companies or mining companies that have been active in Uganda. Obviously, Dr. Jennifer Hinton's been on the ground for a long time. So we started having an engagement, understanding how they found operating in the country, etc. As the discussions with the government of Uganda progressed, and our own assessment of the Kalembe restart advanced, it became clear that there was a significant drilling component of what's required in order to restart the mine on an optimized basis. The resource which is there is non-43101, non-JORC. That needs to change. There's been really no modern geophysical techniques applied, no helicopter VTEM, no ground geophysics, no downhole EM. So there's a lot of, we're excited about, there's a lot of exploration work that needs to happen, and we don't have an exploration team in Uganda. M2 does. As we spent time with their team, we liked what we saw technically, which isn't an observation we can often make when we are dealing with the junior market. They've gone about their program in 2018 a very appropriate way from a technical perspective, very credible. Obviously, they didn't perhaps have the success towards the back end that they would have hoped for, just given the prevailing capital markets. But that's often not how exploration programs play out. It is an investment that takes time to realise results. And so we looked at what they had there. We looked at what we wanted to do in the event that we gained tenure and play a role in the restart of Kalembe and KCCL. And they effectively give us a runway in terms of mobilising an exploration function in country, setting up a legal structure, organising access to drillers, assaying procedures. Dr. Jennifer Hinton's been there for almost 15 years. So she brings with herself a degree of local credibility that we obviously can't replicate in any short period of time. So for us, it really did make a lot of sense. Our primary focus is really Kalembe, but equally we wouldn't be providing a $3 working capital facility for them to commence their exploration program if we weren't excited about the prospects that they have there. So that really, we're excited about the combination of the two companies. It is unusual. You kind of find like-minded individuals, and we didn't have an exploration capability in East Africa. We're also in negotiations with the government of Tanzania across the border on the Kabanga nickel project, and gaining a physical kind of presence in East Africa. It was the right time for us to move forward on that.
Right. And so, I mean, but given the background, predominantly Glencore background, what made you come in as a early stage exploration company rather than go and acquire something a little bit more advanced, perhaps, and moving into development?
Well, I think it really relates around the key assets. We're only looking for assets that are transformative and that are really going to create a vehicle that justifies us kind of sitting here in 3 years and running what we hope to be quite a significant mining enterprise.
Right.
Kalembe is part of that. M2 can play a key role in both enhancing our commercial position and essentially the package we can pitch to the government of Uganda. Now we've got an exploration capability that they like, that they know. We've got a capability, an in-country team that's known to the government, that has a track record of being there and executing programs in an appropriate way for a Western Canadian or ASX sponsor. So they bring a lot to that process. And Uganda's quite exciting. Up until mid-2018, it's not a country I've worked in personally, although Kalembe was a Falconbridge asset and Xstrata acquired Falconbridge. So I was kind of aware of the deposit, but hadn't visited. And after spending more time in Uganda, I mean, we became increasingly excited around Kalembe and what it can represent. And Uganda is also a place where we became increasingly positive in terms of our ability to do business there over the longer term.
Okay. And so how much information or data have you been through? Because clearly this is not a neurology kind of process. This is, I think Simon's previously referred to, they want to hunt for elephants, and I guess you do too. How much work has your team actually done in country with the data which M2 has created?
Well, we've had full access to everything that M2's undertaken. We've had our geology team that's gone alongside and sat down with theirs. In terms of the Kalembe information, we were not in a position to discuss that for commercial sensitivity reasons. Obviously, it's not a Jervois asset today, which we hope to, with the government's support, to change. But you can assume that we're also not approaching that opportunity blind. But we are genuinely excited about what we see in Uganda. And the geology really doesn't stop at the border. So we're in a position at Jervois where we're finishing a pre-feasibility study in Australia. It's on an inferred resource. So there's an intensive drill program which needs to happen to bring that up to the requisite level of certainty to support a definitive feasibility study. And at this end of the market, i.e. the small cap end, the bank, in terms of if I'm funding a $3 or $4 US drill program, investors at this end of the market, they want me to spend that in a place like Uganda where the rock samples are X% cobalt and the news flow is exciting and it has the potential for an equity market reaction that's commensurate with that. Infill drilling a laterite resource. We're project guy people. We understand the importance of that. It's critical, but it's also something that doesn't get perhaps your readers that excited in terms of news flow. Infill drilling a laterite resource and de-risking it, even though it's a critical step. And so we've opened a data room on Nico Young. We've got a large number of parties involved, specifically from China and South Korea thus far. And we see that as a project which is better suited to being moved forward in partnership with others. And in the meantime, it's about creating a balanced portfolio.
You've got, how much cash are you sitting on today?
We have approximately $10 million at the time we announced the transaction with M2.
We're in Aussie dollars there, yeah?
Aussie
Yep.
dollars on a pro forma basis across both companies. That includes our Cobalt 27 shareholding, which we call cash and cash equivalents, because obviously it's a relatively small shareholding in a large liquid company that we can turn into cash as and when we choose. That excludes our shareholding in eCobalt Solutions, a TSX-listed cobalt company, and it also excludes our bulling royalty, which is non-core.
Right. And how do you see your focus in terms of cash and time between Australia coming up with its PFS and obviously earlier stage activity in Uganda?
Sure. So Australia is essentially done until the PFS is about to be, or it is being finalised now. It will be released as part of the shareholder documents, which are distributed to M2's owners. So that will, for all intents and purposes, consider it a prospectus on Jervois. Obviously, the PFS will be 43-101 compliant, and that will be the first time. We're quite excited. It's the first time that we'll become 43-1 registered, and obviously retaining a TSX listing as part of that. In terms of the prioritisation of cash flows, Uganda is really the near-term focus. As I said, we had around 10 Aussie cash and cash equivalents, including the Cobalt 27 shares when we launched. Basis the 3 US program that we're funding in Uganda, we'll get down to around half of that by mid-year. And at that point in time, again, we'll reassess what. By that point in time, we've got 6 months of results. We've also we'll have an idea in terms of perhaps how other initiatives that we're involved in with other governments may be progressing. We're obviously very conscious of having a very well capitalised group, and I think that's the importance of that only is accentuated in these type of markets. So I think that's really where we see one of our competitive advantages as being access to capital. And your readers may not like to hear it, but I actually don't mind weak markets, because this is where we can access capital at this point in time. Whereas I think the North American cobalt market is, for all intents and purposes, is essentially shut to new investment.
I would say all our viewers and readers will be very pleased that you can access capital, because it means you're not in the same position that quite a few of the juniors are at the moment. So I think it's quite good news. So just if I may finish off, so what are your top 5 reasons for shareholders to get excited about this new venture?
I just think that it's pretty rare you get an opportunity to invest in effectively a call option. And if everyone will have a perspective, but it's kind of like at our current share price, I'd argue it's a free call option. So you get a free call option over Kabanga, which is transformative. 60 million tonnes at 4% nickel equivalent, the best undeveloped nickel cobalt sulfide deposit in the world, period. The Kalembe and KCCL, also another transformative event. Neither of these assets should typically sit within companies our size. So I think you'll see share market reactions that'll kind of reflect that if we're successful. I'm also very excited on the broader EV thematic. The reason why we chose to do this within Jervois and start from this end of the market is because this is where the upside is really, you can create something quite exciting. And I do think that, sure, there's a significant oversupply of cobalt today, given what's transpired out of the DRC, but that's in the process of reversing. Inventories are being wound down, and the thematic hasn't changed. The world is still going to electrify. It's still going to need the chemistries that people expected. And if anything, it's just consolidated the shortfalls that are going to be compounded within a period of a short number of years. That was really for what we're looking to create here at Jervois. So I think there's a Nico Young, the pre-feasibility study. I think that's an important benchmark, because up until now, nobody has really had the opportunity to benchmark us clearly against other projects out there. And I think you can also assume that this isn't the only investment opportunity we're looking at. We're not looking to aggregate assets for just to aggregate assets. There are others that are trying to do that with underlying assets that I affectionately refer to as moose pasture. We're not moose pasture aggregators. we really focused on key assets that can make a difference to the actual physical supply of cobalt, nickel, copper moving forwards. And we're putting our hands on those so we can build them. And that's really where we see the leg up of our performance to make the transition. But from explorer to producer, that's the uptick that it's where juniors often get it wrong because it's not easy to do. You have to finance it correctly to avoid dilution. You have to construct carefully so that the commissioning runs well, and you have to actually operate. And it's difficult. You need there's a skill set there that, again, is a reason why juniors get it wrong, because you typically don't have the depth of both technical and capital markets expertise to get it right in a way where shareholders genuinely benefit. And that's where I see our ability to provide a differentiating investment than what exists elsewhere.
Thank you for that summary, Bryce. That was very succinct and quite exciting story to run through. I wish you well in the next few months. I think you've got a bit of hard work ahead of you between now and May in terms of getting this merger together. But we look forward to hearing more about it quite soon.
No problems, Matthew. Thanks for the time. Appreciate it.
Thank you very much.
So I watched M2 Cobalt for a very long time, and I actually went to visit their mine or their exploration sites, as well as a mine that they were bidding for in Uganda. It was the old Kalembe copper cobalt mine, extraordinarily high-grade copper cobalt that was closed by Falconbridge, I think about 20 years ago. It's really interesting, and they were bidding for it, and they have recently entered into a friendly merger or takeover, reverse takeover, with an Australian company called Jervois Mining. Now, Jervois Mining is run by some ex-Glencore guys who own a very large development property called Nico Young, that's nickel cobalt in Australia. But it's a very large nickel cobalt company that, while it is economic, I think is probably they're gonna wait a while to put it into production. They are also presently applying for another mine in Tanzania that is a very high grade ex-Glencore property that has had about 200 million spent on it to date. They're joining with M2. M2 has an incredible amount of ground and an incredible exploration geology team associated with it in Uganda. And by putting the two companies together, they get an incredible exploration resource development team with probably one of the most experienced nickel cobalt production teams around. And by putting those two levels of expertise together and an incredible amount of expertise in operations in Africa, I think there's a really good chance they will get, if not at least one, but both of the properties they're bidding for, and have an incredible team to take that forward. And given how prospective nickel, cobalt, and copper are, they're definitely on my watch list. So I think this could be a very exciting merger and a very exciting company going forward.
Okay. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest, and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.